All right, let's talk about Mastercard. It's one of those companies that's just everywhere. So baked into our daily lives, we don't even think about it. But right now, for investors, this quiet giant is at a huge crossroads. We're talking about a company with an incredible history, but a future that has Wall Street totally split. So let's get into it and break down the two sides of the story, the bull case versus the bear case.
Okay, so to really get a handle on Mastercard's power, you gotta start with its scale. And this number, well, it says it all. 3.6 billion. That's how many Mastercard and Maestro cards are out there, floating around in wallets all over the world. I mean, just think about that. It's a staggering number, right? It really shows you just how deep this company's roots go in the global economy. And yeah, every single one of those cards is a little moneymaker.
So how do they actually make money? Well, there's this perfect way of putting it. Think of Mastercard as a digital toll booth on the global economy. That's really it. They own this huge network that connects all the banks, the stores, and us. And every single time you tap your card, or swipe it, or click Buy Now online, Mastercard takes a tiny little slice. It's a beautiful business model, right? Low cost, huge volume, and they don't care what you're buying, just that you're using their road to buy it.
Okay, so with that in mind, let's start with the good stuff, the bull case. Why are so many people so incredibly optimistic about Mastercard's future? Well, it pretty much all comes down to this idea of unstoppable growth, fueled by some really powerful long-term trends.
So, what's driving all this excitement? Well, there are a few huge things. First off, the war on cash is far from over. You might not believe it, but there's still something like $11 trillion in transactions happening with cash and checks. That is a massive opportunity, just waiting to be digitized. But it's not just that. Mastercard is getting smarter, branching out into these high-margin services. Think data analytics, cybersecurity. That part of their business grew over 20% this year. That's huge. Plus, their global business is on fire. Cross-border payments, which are super profitable, jumped 15%. And they're not sleeping on new tech either. They're pouring money into AI, fraud prevention, and even getting into things like stablecoins. They're trying to build a bridge to whatever comes next in finance.
And look, this isn't just wishful thinking. Wall Street is seeing this translate into some very real numbers. You can see the projection right here. Analysts expect revenues to jump from around $32.5 billion in 2025 all the way up to over $42 billion by 2028. Let me just repeat that. They're on a path to add $10 billion in new revenue in just a few years. That's the kind of growth that gets investors excited.
This quote from Argus Research really sums up the whole bull case perfectly. They're hitting on all the big points, right? The massive ongoing shift from cash to cards, the boom in online shopping, and just the simple fact that cards are more secure and convenient. You put it all together, and the argument is pretty clear. Mastercard is sitting in the perfect spot to just ride these huge, long-term waves of change.
Okay, but it's never that simple, is it? For every bull argument, there's a bear lurking around the corner. And the bears see a very, very different future for Mastercard. They see a company facing some serious headwinds that could throw a real wrench in that whole growth story.
And the bear case really starts with a price tag. Just look at this. Mastercard stock trades at a PE ratio of about 31.5. The rest of the industry, it's closer to 20. So what does that tell you? It tells you this stock is priced for perfection. People are paying a huge premium because they expect everything to go right. That means there is absolutely zero room for error. If the company stumbles, even a little bit, the stock has a long, long way to fall.
So what could actually go wrong? Well, the list is pretty serious. The number one boogeyman is regulation. Mastercard is always, and I mean always, in some kind of legal fight over its fees, both here in the US and over in Europe. Then you've got costs. Their expenses are climbing, up over 14% this year, and that starts to eat into those juicy profit margins. And competition? It's getting brutal. It's not just Visa anymore. You've got these fast, nimble fintech companies like Square and PayPal nipping at their heels. And then there's the big one. The risk that some new technology, some new payment system just comes out of nowhere and starts to make their whole network less relevant.
And Morningstar nails that number one risk right here. Because Mastercard and Visa are basically a duopoly, they have a giant target painted on their backs. Regulators are always looking at them, thinking they have way too much power. And this isn't just some what-if scenario. They have paid some absolutely massive fines in the past. That legal risk is like a permanent dark cloud just hanging over the company.
So there you have it, a really strong bull case and a pretty scary bear case. And the result? Wall Street is completely torn. I mean, the people whose entire job is to figure this stuff out just can't agree on which way this stock is going to go.
I mean, just look at this. You've got some analysts saying the stock is going to soar to almost $770 a share. But then you've got others on the other side of the street who think it's only worth around $520.
That is a massive difference, nearly $250 a share. It just goes to show you there is a fundamental disagreement here on whether the bulls or the bears have it right.
And you see the same division when you look at the ratings. Sure, a lot of analysts are positive. You see a lot of buys. But look at that hold rating. Nearly a quarter of analysts are on the fence. They're basically saying, yeah, it's a great company, but at this price, I'm not so sure. They aren't telling you to sell, but they're definitely not pounding the table to buy either.
All right, so we've laid out both sides of the argument. We've seen the evidence, we've heard the bull case and the bear case. We've seen that Wall Street itself is divided. So now it comes down to you. It's your call.
It really boils down to two completely different futures for this company. The bull future, Mastercard is this unstoppable titan just capitalizing on the huge global shift to digital payments and reaching incredible new heights. And then you have the bear future, where it's this expensive giant that just gets bogged down by lawsuits, rising costs, and all that new competition.
So when you weigh all of that, the powerful growth story versus those pretty serious risks, which side do you find more convincing? Which path do you think is more likely for Mastercard?
Bottom line, where do you stand? Are you a bull or are you a bear?
We really want to know what you think. Head down to the comments and let us know your take. Are you buying this stock, selling, or just staying on the sidelines? And hey, if you like this breakdown, do us a favor and hit that subscribe button, because we're going to be giving its biggest rival, Visa, the exact same treatment very soon. You don't want to miss that one.